What if you could hold US Treasuries, earn their yield, and use them as collateral in DeFi 24/7 from anywhere in the world with institutional-grade compliance? What if public stocks and ETFs could trade freely on-chain with the same economic exposure as the real thing? That is the vision of Ondo Finance. In this video, we go deep. We'll cover every major product: OUSG, USDY, Ondo stocks, the full technical architecture including the new Ondo network with trusted execution environments, Flux Finance, the Ondo token and its governance model, compliance structures, Tokenomics, and how Ondo is building the bridge between traditional finance and on-chain markets. By the end, you'll understand the complete stack. Let's begin. Ondo Finance is a real-world asset, RWA platform that tokenizes traditional financial instruments, primarily short-term US Treasuries, money market funds, and publicly traded equities and ETFs, and brings them on-chain as fully backed programmable tokens. Founded with a TradFi first mindset, led originally by former Goldman Sachs digital assets executive Nathan Allman, Ondo's goal is not to invent crypto-native yield, but to package the safest, most liquid traditional assets into blockchain-native form so they can be held, transferred, used as collateral, and settled 24/7. As of mid-2026, Ondo manages roughly $3.5 to $3.8 billion in tokenized assets and holds a dominant position in tokenized equities, often cited around 60 to 70% market share in that segment. It operates across multiple chains including Ethereum, Solana, BNB Chain, and others. Ondo's product suite is carefully segmented by investor type and regulatory constraints. 1. OUSG, Ondo Short-Term US Treasuries. OUSG is the institutional flagship. It provides exposure to short-term US Treasuries and related money market funds, including significant holdings linked to BlackRock's USDY and other partners like Fidelity, Franklin, WisdomTree. Designed for qualified purchasers and accredited investors. Supports 24/7 minting and redemption, often via stablecoins. Accumulating NAV model. The token price rises as yield accrues rather than rebasing. Fees are low. Management fee historically capped and temporarily waived. Legal structure is bankruptcy remote with regulated custodians. 2. USDY, US dollar yield. USDY is the more permissionless, retail-accessible non-US person's yield-bearing token, backed by a portfolio of short-term US Treasuries and bank deposits. Accrues daily yield, typically in the 3.4 to 3.6% APY range depending on market rates. Functions like a stablecoin with built-in treasury yield, highly composable in DeFi. Available on multiple chains and widely integrated. 3. Ondo Global Markets / Ondo Stocks. This is the equity tokenization platform. It brings hundreds of US publicly traded stocks and ETFs on-chain, over 400 assets reported. Tokens give economic exposure equivalent to holding the underlying, with dividends reinvested net of withholding. Available primarily to non-US investors under Reg S structures. Multi-chain issuance Ethereum ERC20, Solana SPL, etc. Supports fractional ownership, 24/7 secondary trading, and growing DeFi utility. Backed by bankruptcy remote SPVs, over-collateralization, independent directors, daily attestations, and regulated custodians / broker-dealers. Recent regulatory progress, including FINRA authorizations via Oasis Pro Markets, is expanding what can be offered, including to US persons for certain custodial tokenized securities. The process follows a classic RWA model with strong legal wrappers. 1. Investor deposits stablecoins or other accepted assets. 2. Ondo, or the relevant SPV issuer, acquires or allocates the corresponding real-world assets held at regulated custodians. 3. Equivalent tokens are minted on-chain to the user's wallet. 4. Tokens can be transferred, used in DeFi, or redeemed subject to eligibility and liquidity windows. 5. Redemptions reverse the process. Tokens are burned, underlying assets are sold or transferred, and proceeds returned, often in stablecoins. Key technical and legal safeguards include full, and often over, collateralization, bankruptcy remote special purpose vehicles, third-party security interests and independent oversight, regular attestations and audits of reserves, smart contracts that enforce mint/redeem logic with compliance checks. Ondo also operates infrastructure layers such as Nexus, shared liquidity for instant stablecoin redemptions across tokenized Treasury products, and Ondo Bridge, cross-chain movement via protocols like Layer 0. In July 2026, Ondo launched the Ondo Network, a significant architectural evolution. It moves away from the earlier vision of a full standalone Layer 1 Ondo chain toward a modular, high-performance design optimized for financial markets. Core design goals: fast and private like a centralized exchange, verifiable like a blockchain, and non-custodial. How it works: trusted execution environments, TEEs or enclaves, primarily Intel SGX. Application logic: order matching, margin calculations, liquidations, etc. runs inside hardware-isolated secure enclaves. Even the machine operator cannot inspect or tamper with the running code or private state. This delivers near CEX speed and privacy. Decentralized attestors: a multi-party quorum of independent operators cryptographically attests that only approved code is running inside the enclaves and controls critical keys. Verification is cryptographic, not merely contractual. On-chain settlement: final custody and settlement of assets remain on public blockchains. The first major application is Ondo Perps, a high-performance perpetual futures platform that can use tokenized RWAs as collateral, offering deep liquidity and professional-grade execution while preserving verifiability and non-custodial design. This architecture separates concerns. Flux Finance is Ondo's decentralized lending protocol, a Compound V2 fork now governed by the Ondo DAO. Its key innovation is supporting both permissionless assets, USDC, etc., and permissioned RWA tokens like OUSG as collateral. Liquidations involving restricted assets are limited to whitelisted addresses that pass compliance checks, creating a hybrid permissioned DeFi environment suitable for regulated assets. This allows holders to borrow stablecoins against Treasuries. Ondo is an ERC20 governance token on Ethereum, bridged to other chains, with a fixed maximum supply of 10 billion. Primary utility: governance of the Ondo DAO, especially over Flux Finance parameters. Voting power is proportional to holdings and can be delegated. Locked tokens can still participate in governance. Importantly, ONDO does not currently capture direct revenue or yield from OUSG, USDY, or Ondo stocks. Allocation: approximate. Ecosystem growth: approximately 52%. Protocol development/team: approximately 33%. Private/equity investors: approximately 13%. Community/public sales: approximately 2%. Tokens have multi-year vesting with cliffs. The token is best understood as a control and ecosystem incentive asset. Risks include: regulatory restrictions mean many products are unavailable to U.S. persons. Smart contract, custody, and counterparty risks remain. Ondo token value is tied more to ecosystem growth than revenue. Competition is intensifying. Looking ahead, Ondo continues expanding tokenized equities, deepening multi-chain support, and building high-performance infrastructure. Ondo Finance is one of the clearest examples of institutional-grade real-world assets moving on-chain, combining the yield and credit quality of U.S. Treasuries and public equities with the programmability of blockchain. From OUSG and USDY to hundreds of tokenized stocks, the stack is designed for both compliance and crypto-native utility. Like the video, subscribe, and comment which product you want covered next. Thanks for watching.